And then welcome to a special session of the WAIMM Distinguished Lecture. The industry has changed, times have changed, and the system and way of doing things has also changed. Gone were the days where we were doing more of greenfields exploration. Now it's become more of brownfields. And then even in some respects, we are losing the exploration. But in the past 8 to 10 years, there's been great adventures, or exploration adventures in West Africa especially. For instance, Burkina was able to raise a mine, about 5 different mines within 7 years, all through rigorous exploration techniques and procedures. Today we are very distinguished to have a distinguished lecture from one of Africa's greats. He's Bansah. He's currently the Director, Mining Business Optmisation for Mining&Res Services Limited, Resource Services and Services Limited in Ghana. And Dan has worked everywhere in the world. He comes with great experience. And I think he's going to provide us at least some reasons and then some solutions as to why we're having this sort of disparity in exploration. Without wasting any more time, I want to invite Dan. But my name is Res&Serv, the president of WAIMM. I'm going to be your host for today. As always, sit back, relax, enjoy, and then pick the most of the knowledge that's going to be shared today. Dan.
Yeah, thank you, Lawrence.
Yes, take us away.
Thank you, Lawrence. My name is Dan Bansah, as said. Today, the lecture is on state and trends of global exploration with emphasis on gold exploration in West Africa. It is a very lengthy lecture. I've tried to cut it as much as I can, and I hope that I've not removed any salient points. But if somebody wants the bigger presentation, I can share it after the talk. This is the outline that we'll be following. We'll be looking at the goals of exploration, the nature of mineral exploration, mineral economics, that's the production, the demand, and price. Then we'll be looking at the tendencies of global exploration, then gold exploration investment in West Africa. We'll look at some of the challenges, and then we'll draw some conclusions. But what we all have to understand is that the world is changing, and it's changing with lots of risk and uncertainties. The goals of exploration, basically, we explore to model ore bodies by optimal drilling, and by optimal drilling, I mean one would want to look at spending his money where he thinks he can get the maximum returns in terms of drilling. You would also want to look at your sampling interval, whether it has to be adequately sampled in terms of the ore body to improve the quality of the ore body and to ensure that you don't have any uncertainties during production. And at the end of the day, you will use this information from sampling, following up from the drilling to delineate your mineral resources and thereafter your reserves for mine development. This then have to be captured into an environment where this ore body can be exploited with minimal destruction. One, in terms of risk and in terms of damage to the environment. And most of the times, investors are looking for maximum returns of their investment. Why mineral exploration? The world population, as we all know, is growing faster than at any time in the history of the world, and mineral consumption is growing faster than the population as more consumers enter the market for minerals. and the global standards of living also is increasing. Does that mean that we will face mineral supply crisis in the 21st century? If so, can we solve this mineral supply crisis by increased mineral exploration? And with this exploration, or will this exploration require more geological information and better land access? To address these concerns or these questions, this must be based on prediction of world demand for minerals into the 21st century, along with a better understanding of the relationship between global mineral reserves and those in the individual deposits. Where exactly are our future mineral reserves, and what do we know about them? What I've done is to try and categorize mineral exploration companies into various activities and at what stage the activity is actually executed. So I've classified them into greenfields exploration, and basically sometimes you would include greenfields exploration to encompass grassroots exploration and advanced exploration because they are virgin grounds. But where I want to come in here is to try and split the greenfields off the advanced exploration on a greenfield entity. So I've blocked it up into greenfields, advanced exploration project, and then brownfields exploration. You would notice that success in exploration in terms of greenfields is 1 in 40 projects over the past 40 years. And in terms of the discovery rate for advanced exploration, turning out into a project is 1 in every 8 of such projects. And for the brownfields, most of the times it's 1 in 3 that ends up into becoming an exploitable reserve. Expenditures have also been lower in the greenfields arena, between 5 and 10% of total global exploration spend, and 10 to 20% in advanced exploration, and about 70 to 85% in the brownfields or mine-based exploration activity. The slide here is actually reference to Sibanya-Stillwater during a presentation that they did, and they actually put a value chain on all the exploration stages. What you would see here at the bottom is that you have the value of exploration being minimal at the grassroots stage, and as you advance the project up the value curve through inferred, indicated, and maybe bankable feasibility study, you have the maximum value. This maximum value then drops immediately, you commit capital to it. And then with time, when you go into production, the value of the mine comes back. So it is just showing the value of exploration and at what stage an investor would want to come in. Most investors would look at their strategy and say, on this curve, where should we come in and when do we drop off? And this is what most investors would do. So if they say some investor is going to be investing in, say, a copper project, say in the DRC, they will look at this curve and then they say, look, what should be our strategy here? Do we take it to the bankable feasibility stage and sell up the project, at the feasibility pre-feed stage and sell up the project, or do we advance it into production and realize the maximum return? They also look at country risk and other risk factors to determine the strategy, depending on which country they would want to invest. So the curve actually provides a flexibility in the individual investor's harvesting strategy. Grassroots budget share of exploration is at a record low. And as Lawrence indicated, from this chart, what you would see is that the grassroots curve is actually going down year after year. And the large scale or late stage or advanced exploration activity. It's more like also going down, but at least that is going down with the trend of the global investment in mining. And mine site exploration is actually getting bigger with time, okay? Regional median investor attractiveness score. This is one from 2016 and 2017. I just want us to look at the score of Africa, okay? Its attractiveness in relation to Argentina and Asia, okay? And then if you also look at Latin America in the Caribbean as well, and the Caribbean, you realize that Africa is placed well, irrespective of the decline, okay, from 2016 to 2017. In 2018 and 19, the decline continued. Look at it, okay? So it tells us that the regional median investor attractiveness score for investment in Africa is on a downward trend. Not Latin American countries, the Caribbean have all surpassed us in terms of the investment score, and we'll try and then attribute some reasons as to why Africa is falling short of the investment attractiveness. This is the mining investment attractiveness index in Africa alone, okay? Just look at it. Ghana ranked #1, followed by Mali. Burkina Faso is at the bottom somewhere there, and Ivory Coast is at the bottom somewhere there. The main reason why I've highlighted these countries is that they are part of the countries in West Africa. So it will have an impact on the investment climate within the West African sub-region, okay? Yes, Ghana is ranked up here. Last year, Ghana did not participate in the investment attractiveness index score. I don't know why we didn't, but it would, if we had participated, you will see that we would have dropped below Burkina Faso. And as the presentation goes along, I would elaborate a bit on it. Trends in global exploration spend. Okay, you will notice that about 50% of global exploration spend is actually focused on gold, okay, followed by copper and other commodities. Zinc is up there, and I'll be talking through some of these commodities as we go along. But the exploration efforts have increased worldwide on the back of stronger metal price, okay? Look at the metal price, okay? During the mining boom of 2002 through to 2012, okay? There was a boom, then we hit the financial crisis in 2008. There was a dip just within that year and a half, and then there was an upsurge, okay, of the boom again until 2012, when we recorded the highest commodity exploration spend. Then from 2012 coming down, we've been dwindling down the curve until 2016, when we got to another bottom, and there was a slight tick from 2017, 2018, and then we've dropped again in the last 2 years. This is split in terms of by region. And what you would notice is that just as almost all the regions are about flat, Latin America from 2008 is on an upward trend. Even the crisis, the global financial crisis, didn't have major impact on Latin America in terms of exploration. Almost many of the giants, the big players in North America actually moved into the Latin Americas, and they are still there and exploring and spending huge sums of money, and they are making huge discoveries. In terms of global exploration spend by the type of exploration, you will notice that grassroots exploration spend has been on a downward scale, even throughout the boom from 2002, okay, coming down till date. The exploration spend by grassroots activity is considerably going down. And if that trend continues, what is going to happen to the future of non-ferric commodities, whether we're going to be making other discoveries or we'll continue working around mine sites. Late stage exploration, yes, it's just flat. It's not changed much. And then you will see an escalation or a rise in the exploration spend by mine site. This curve is actually mimicking the fact that despite the spend by the majors in the early 2000s, okay, what happened was that there was a down scale, even though as we go through the boom, the majors were not spending much, rather the the junior companies started spending and exploring a lot of grounds in the early 2000s up. You could see it going up. And then just before we hit the financial crisis, there was a downscale and it has continued in that vein. Government spending on exploration has been flat, as well as that of the intermediate companies. It's always going down. There's a curve that actually mimics the amount of drilling that has been spent globally in relation to the total expenditure. It's definitely a correlation between the two. Most of the money for exploration is committed to drilling. This slide is looking at the exploration of deposits and the appraisal of share of expenditure by junior and senior companies. What you will notice is that up and until 2009, expenditure by the majors or senior companies was going up in terms of exploration spend. And then the junior companies in the reverse were not spending much from 2009, following the financial crisis. Most of these companies folded and then left various countries. The silver lining for junior mining companies and junior mining and exploration companies have shown that the returns in terms of cash flow has been fairly flat, and up until 2018, it started going down scale. And this is something that the junior mining companies will be looking at, whether they should continue spending whilst cash flow is reducing. In the same vein, average life of mine of major gold producers, okay, have increased from 2008 up until 2012, when we had a peak of prices in terms of commodity prices, and then it started dwindling, and it's been going down the scale, and it's been flat in the last 3 to 5 years. Okay, so the average life of mine is gradually reducing, and does it mean that if we don't do anything, we'll run out of our mineral reserves as a continent? Global gold exploration spend by country. Here, you will notice that Canada, US are ranked very high. There's a lot being spent in Mexico. Then down the scale, I've highlighted Burkina Faso, I've highlighted Mali, and I've highlighted Ghana. What you notice is that Burkina Faso and Mali are attracting more investments than Ghana. And we'll talk through the reasons. And it's evident, you can even see it with the movement of some of the drilling companies. Instead of being in Ghana as their head offices, some of them are relocating their head offices into some of our neighboring countries. Okay. Then you look at the global annual non-ferrous exploration budget from 1996 to 2009. What you would notice is that this curve of annual index metal price correlates very well with the global non-ferrous exploration budget. Okay, so the more people spend is primarily based on the fact that they've seen an uptick in the commodity price. So there's a very good correlation. What we'll also notice is that there was a steady rise until 2012. Then there was a major decline, okay, in commodity prices up until 2016. And as I elaborated, from 2016 up to 2018, there was an uptick. Then there was a drop of about 3% in exploration budget. And then 2020 is something to talk about as part of the uncertainties of this world. So global non-ferrous budget are still below the 2014 levels. The persistent lack of investment in the supply pipeline is causing several base metal commodities to head towards the market deficit. So you can see it. There was a peak in 2012, and then there was a decline, okay, for most of the base metal products. But gold, as of 2014, saw an uptick. Okay, so apart from gold, most of the base metals and other commodities have actually dwindled in terms of their spend. Gold dominates as the commodity with the highest spend across all the regions, with West Africa being primarily gold. If you look at the colors, you see that everything there looks a bit yellowish as a symbol for gold, and then the other commodities. So if you look at West Africa alone, it's primarily gold, okay? In terms of the exploration spend by region, West Africa is about 5%. The whole of Africa is about 14% in total. Australia is about 13%. Canada has the highest spend of about 15%. Then in terms of developmental projects, I'll split this into regions, and there's a sub-split, but we've made Africa as one block. And then you will notice that Africa is receiving its fair share after Australia, Canada. You see that Africa is playing a major role here in terms of the spend. Hotspots for mineral exploration are primarily based on primarily based on all the commodities. You will notice that these have been discovered in the recent past. When I talk about recent, we're talking about 50 years plus. Then after 2000, you will notice that major projects that were discovered are dotted all around, the bulk of them coming in from the South American bloc again, okay? Huge projects were discovered, most of them being gold, copper, moly, and other projects. Australia saw about 2 tier 1 discovery. In terms of the significance of mineral deposits and that were discovered after 2000, you will notice that I've highlighted some regions as the key areas people will focus in terms of current hotspots. And these hotspots are still striving, and people are still focusing their investments in those areas. West Africa still sits in there. The Central Africa plays a key role there. That's Tanzania, Congo area is in there as well. And apparently South Africa has been left out. In terms of consumption, of commodities, you will notice that China is ranked 1 in almost all the commodities except oil. Okay, so virtually China consumes almost all the products that we produce. They are the number 1 in terms of consumption. These are Chinese foreign operations in the world, and is dotted around the world in various commodities. Relatively small in terms of gold in Australia, and in recent times, you've seen Chinese investments in gold coming up. Okay, these are Chinese foreign projects that they've built or are in the process of building. And you've seen the Chinese investment in Ghana. It's a new territory. They've actually come into Ghana and they've invested in the gold project, the Namdini project, and that's a world-class project. In terms of countries in the world where nickel is mined, so what I'm going to do is step through the various commodities, and I'll just flip through quickly. Nickel, 2010 to 2018, in terms of countries that produce, I think Indonesia ranks 1, followed by the Philippines, and then in that same order to the bottom where you see the United States. You don't see much from Africa except South Africa, okay? Then in terms of nickel reserves, the bulk of it is sitting in Australia and followed by Brazil. The United States is still there, proportion of nickel that they have within the US. And then you look at from 1995 to 2017, the nickel production. What you will notice is that there was a steady rise in production following discovery, and it's plateaued, okay, in the last 8 years. It's plateaued. Nickel production has actually plateaued. In the same vein, if you break it down into regions, you will see that the production from breakdown from nickel is actually increasing from 1996 to 2017. You notice that China is picking up most of the world's nickel that is being produced. And it's as a result of industrialization in China. I believe Africa, which is there with 4%, will have its fair share with future industrial development of the African continent. Primary nickel usage by region, same thing. The Asian bloc, which includes China, is taking about 74%. I think China is about 53% of the total usage. Primary nickel usage, okay, is there. China is taking 53, and the rest of the world 47. In terms of usage, what you will notice is that the Asia bloc, okay, is just escalated. That means there are more industrial usage of nickel by this Asian bloc, okay, and that has to be looked at. So they are taking most of the nickel that is produced. Okay, let's move on quickly to other commodities. Let's look at copper. Okay, let's look at copper, and let's look at the price of copper versus the shortage that's been created. There's always going to be a lag somewhere, about 3 months lag in this scale. But what you will notice is that there's definitely a shortage in the copper production. And I believe that is what is driving the uptick in the copper price. It's gradually moved into the $3 per pound. I think today it was 3.1. I think investors are looking at it peaking somewhere at $3.3 per pound. In terms of copper consumption, you will notice that there's a steady rise in the copper consumption over the years as industries develop, as the world population grows, there's an uptick in the demand and the consumption of copper. The total mined copper has been increasing steadily, okay, on an average of about 2%. And this projection is predicted to continue in the next few years. We believe that, this slide is talking about the incentive price that most investors should be looking at for copper, about $3.3. It was somewhere the 2.6 region when most of the mines in Africa started closing, especially in the Congo. But there's been an uptick and investor confidence has been raised in the Congo, in the copper production. This is the global copper budget, exploration budget for copper. There was a steady rise through 2000 to 2012, and then there was a decline. Yes, the financial crisis of 2008 saw a decline, a dip, but there was a quick rise to 2012, and it's been going down in terms of the exploration budget for copper. And we would have to try and understand the consequences if this trend continues. What is happening is that mine production is increased up and until 2018. Then it plateaued in 2019, and then gradually there's a decline. So there's definitely going to be a gap in the demand for copper if that steady rise in consumption continues and there's no production increases, then we're going to be seeing a shortage in the copper production, which will result in maybe a rise in the copper price. Refined copper demand is the same thing. There's always a steady rise of about 2%, and in China it's about 2.2%. And what we all have to understand is that for every 20 to 30 years, the cycle of the demand for metals actually doubles. And that is what this graph is actually mimicking. And with the demand for copper going to go up with increased population, increased standard of living, what is going to happen is that the need for more copper discovery will be needed to increase the production. That's the shortage I'm talking about. By 2027, we will require an additional 5 million tons of copper because there's been a steady rise and then it's going to plateau in terms of production. So if nothing is done, there's going to be a shortage of about 5 million tons. And the probability is that, yes, some mines might increase their production, but that is a highly probable scenario. That's a red curve. But if even that happens, the demand is still going to be there and the deficit is going to be created. Same thing by 2030, it's going to be 5.7 million tons. 5.7 million tons will be the deficit by 2030. Without projects, supply gap will exceed 15 million tons by 2035. And as a result, we need to look at copper as a critical commodity to invest in. One thing that you will notice is that most of the copper discoveries, the big copper deposits in the world, were all discovered by our grandfathers. It tells you that recent discoveries in copper is very minimal. If you look at this particular chart, okay, in various countries. Among the world's largest copper deposits, you will notice one in Africa, Kamoha. You will notice that they have huge reserves, and it's a project that is world-class. Maybe it would be good for some of us to visit that particular project. It's a huge project and it's coming on time and on budget. The share of iron ore exports in the world, in a similar vein, is increasing gradually all over. And if you look at the main players, Australia, Brazil, and the rest of the world, is in the decline. Brazil is more or less even out, and Australia is gradually, but it's also plateaued from 2015. It's plateaued in terms of our production, okay? Iron ore production in the world, those are the huge players globally. And then let's talk about gold, because that is going to be our main focus. I don't want to talk about the other commodities. Let's focus on gold. Gold in 2019, global gold mining production was reported as 3.463 tons, 3,463 tons that was produced, down from a percentage from the prior year, and the first year-over-year decline in output since 2008, okay? And what you will notice is that it's been a steady rise from 2010, the last decade, up until 2018, and 2019, there was a 1% drop in the production of gold, okay? This raises the question as to whether we have peaked in terms of gold supply, and whether there will be no need for new mines to be discovered and new gold projects to be developed. The top 10 gold producing countries in the world, China ranked number 1. Down the curve, you can see Ghana, surpassing South Africa, Mexico, and then Brazil, okay? So these are the gold producing countries. South Africa once produced over 1,000 tons in 1970. And today they are producing less than 120,000 tons, which is actually as a result of what we all know of. The mines are getting deeper, cost is high, coupled with the labor strife or labor unrest that has crippled the South African mining industry. In terms of major discoveries between 1990 and 2017, you will notice that there was a steady discovery, okay? From 1990 up to 99, there was a dip, then there was a steady rise in discovery up until the financial crisis of 2008. There was a dip, and then there again, average discovery was about 50 projects per year. Then over the last 5-6 years, gold discovery or discovery of gold projects have dwindled completely. And that's the question mark that I've put there, okay? If you relate it to the exploration budget, it's been at a rise, apart from during the period of the financial crisis in 2008, there have been a steady rise in exploration budget up until 2012. Then all of a sudden, investors stopped investing at that same rate in the gold arena. And as a result, you can see the change in the number of projects that were discovered. This curve is looking at the budgets for exploration, okay? Over the years, same thing, 2003, steady rise up to 2012, and then a dip in the production, in the exploration budget. Okay, there's definitely a correlation between the budgets and gold price, and a number of companies that also came into play was a steady rise up until 2012 when most of these companies started closing shop. Okay. In terms of Africa, in terms of Africa, the African discoveries, okay, based on exploration spend, about 17, Africa spent about, exploration spend is in the region of about 17 billion over the period in terms of exploration. Latin America is about 28 in that same order, Asia. So you notice that Latin America is attracting most of the exploration spend. Yes, discoveries in Latin America is about 118 number of discoveries, about 23% of the discovery. Africa plays very well, even though we have relatively lower spend in terms of exploration, giving it about 22% of the discoveries that were made. The West African sub-region is primarily underlain by the Birimian system, and it plays host to quite a number of deposits, okay? It is reported that the West African greenstone has actually produced or is endowed with over 170 million ounces of gold. You can see a cluster of gold projects in Ghana, a couple in Burkina, okay, in Guinea, Senegal, and you will notice that the Birimian system is actually huge. The greenstone belts within the Birimian system is actually very huge in the Côte d'Ivoire area. And it's an area that we would want to highlight for potential exploration find. Côte d'Ivoire has about 35% of the Birimian greenstone, followed by Burkina Faso, which has got about 22%, Ghana 19%. Ghana is produced over 110 million ounces, or is endowed with about 110 million ounces of the gold that has been found in the West African system. And so that's just an the total. So if you look at about 35% of that system. Depend on how you look at deep structures within the Côte d'Ivoire enclave. One will be inclined to go and find the next 100 million ounces with a 35% coverage. Okay. In terms of fiscal regime, in terms of tax rates in Africa, I've put Ghana there. If you look at the effective tax rate in Ghana, it's about 47%. And it's primarily due to the fact that we've raised our corporate tax from 2012. It used to be 25% and it's now 35% for corporate tax. Okay. In terms of the fiscal regime compared to the rest of the world, you will realize that Africa is well aligned, or West Africa in general is well aligned with that of the developed world. Australia, in terms of corporate tax, is 30. The US is very high, 47%. Canada is 31. So relatively, the average in West Africa, in terms of the highs, is about 35%, and then 6% in terms of royalties. Cumulatively, what you will see is that the significance of exploration effort in West Africa is actually attracting the needed investment. Over 5 billion has been spent in West Africa over the last 10 years. And its distribution, you see that Burkina Faso is attracting a lot more of the investment than Ghana, Côte d'Ivoire, and Mali. So you notice that Côte d'Ivoire and Burkina Faso have actually gotten more of the investment than you see in Ghana, even despite the fact that Ghana has made considerably a number of discoveries. But the exploration spend in these countries in recent years have actually been on the high side. Okay, so globally, in terms of West Africa related to the global players of Canada and Australia, West Africa is placed 3, and I think we overtook the US last in 2018 in terms of global exploration effort. Okay. The West African exploration success in terms of ranking with the rest of the world, you realize that over 79 million ounces of gold have been discovered over the past 10 years in West Africa. Okay. And the key areas are in Burkina, Ghana, Mali, and then Cote d'Ivoire. So if you add them and then you block it out into regions, West African region actually supersedes most of the gold provinces of the world in terms of discovery in the last 10 years. Okay, the size of the Birimian greenstone is 5 times smaller than the gold province of the United States and Canada. Okay, yet still, West Africa has seen a lot more discoveries in recent times, in the last 10 years, than these other blocks. I want to focus a bit on projects that are in the pipeline for development in West Africa. And if you look at this table, okay, these new gold projects are basically either new discovery, mine expansion, from maybe open pit into underground, and a lot of these have been discovered. These are new projects, so you are seeing them as new investments that are coming into the West African region. And if you look at it in terms of quantum numbers, in terms of the investment capital, these are very high investment capital projects. And I think there's a fair share of the distribution. Burkina has got like 5 or 6 projects here. Ghana has got a couple, maybe about 7 projects. And it includes mine site expansions from open pit into underground, and as well as new projects that are coming up into production. Yes, the Namdini project is there of Cardinal Resources, about 400 million investment. And current proposal is that we should be seeing it start up in 2022. Okay, so this is the West African region in terms of investments that are supposed to come in. There are challenges in exploring for gold in West Africa. Okay, and these have actually impacted on the exploration drive of some of the countries in West Africa. Despite the trend in the price, look at gold, which is the main commodity in West Africa. About 75% of the investment in West Africa is all in gold, okay? And the price is been on the ascendancy because of the global uncertainty, COVID-19, okay? But yet still, West Africa is not at level in terms of the investment of and financing of grassroots projects. I was of the view that with the current uptick in the gold price, we should be seeing a lot more investment in the greenfields region, in the greenfields area of exploration. But this is not happening, and we would have to find out why investors are adamant in investing in greenfields project. I believe that if you come in at that time, it is the period that you come in at low risk or no, low key entry is cheaper, and gradually with persistency, you can actually make a very good discovery. The bleak economic conditions make the task even more onerous, okay? Standard policy reforms are required in the region, especially in some of the countries, to create an environment for injecting new investment in grassroots exploration. I believe Ghana is not an exempt from this. You could see a lot more investment going into Burkina Faso, a lot more going into Mali, which is even risky, and even in Cote d'Ivoire, okay? Even despite their geopolitical nature of those countries, Ghana is still not attracting investment in the greenfields area as a result of our tax on exploration and services like drilling, services like laboratory services. Definitely, we need to look at reform and then regulate artisanal and small-scale mining. They definitely have a conflict with most of the mining companies and exploration companies. Growing geopolitical tension in the sub-region. We've seen it in Mali. Cote d'Ivoire, let's pray nothing happens. Guinea is still an area that has to be looked at and watched carefully. So there's this tension in the sub-region in terms of political upheavals, and that has to be looked at as investors would want to look at all this before they put their money in the West African sub-region. There's also increased insurgency of armed groups, including bandits. Some of them they don't have any political ambition. They are just bandits. And banditry is something that is actually impacting some mining jurisdictions within the West African sub-region. So these continue to hamper the investment drive, and especially in the greenfields area. It's actually impacting, and security with a small company trying to do exploration in an area where there's insurgency, one would not want to venture, okay? Even producing companies have to put in stringent security rules and guidelines to ensure that they can sustain their activities or operations, okay? The use of West Africa United Force with the appropriate technology and intelligence coupled with dialogue and logistical support from the developed world should be employed to break the front of the escalating armed insurgency in the sub-region. So that's just a recommendation. West Africa, in terms of opportunity, yes, it's produced or it's endowed with about 170 million ounces as a gold region. The high discovery rates per exploration dollar invested relative to the other gold provinces in the world. Projects located in proven gold mineralized district with highly prospective geology. Yes, the Birimian Greenstones is highly prospective, and a lot more ground is yet to be worked or covered in terms of exploration, especially in Cote d'Ivoire and some of the countries north of Ghana. There's definitely excellent locations with access to infrastructure and cost efficiency in some of the jurisdictions. Cote d'Ivoire has excellent infrastructure. So we believe that if discoveries are made there, relatively its development costs and operational costs will be relatively cheap. A lot of the area is underexplored. The region is highly leveraged to early stage exploration, and we would encourage investors to look at that particular tag, greenfields area, to put in more money, because there's definitely a gap that has to be filled. There's increased corporate activity from new players in the region and other gold operators. We are seeing Shandong Gold acquiring Cardinals Namdini. We've seen Oryx acquiring Azuma, and a number of mergers are being looked at in terms of consolidation in the gold space within the sub-region. Additional exploration in the region by Barrick and Newcrest. I think they have a joint venture exploration drive in Cote d'Ivoire, and they are actually covering a lot of those grounds. I believe other companies should also look at that particular region in terms of gold exploration. West Africa is definitely an emerging gold exploration investment hotspot. Okay. In conclusion, what I would say is that exploration expenditure is cyclical, and industry is currently spending on average about 9 billion, down from an average of 11 billion over the last decade, okay? The current hotspots for exploration success are Latin America, in the Yukon, the Northern Ontario, West Africa definitely, and then the East African, or I'll call it the Central African region in China. Discovery rates are rising for many commodities, and especially gold, because you need to be persistent, you need to spend more money to unearth the potential that is hidden in the ground. And over the next decade, the average rate is projected to be between $35 and $40 an ounce per discovery, okay? For gold, and then for copper, we're looking at 2.3 cents per pound. And then for uranium, we're looking at $4 per pound as a discovery cost. Not all discoveries turn into mines, okay? Conversion rates is between 60 and 80% depending on the metal, size, quality, and location. For the successful project, there is a lag of about 10 to 15 years between discovery and development. And even at the current exploration expenditure rates, many industry sectors, particularly uranium, struggles to find sufficient to deliver good projects. Conclusions continue. In terms of long term, the market will balance itself through the complex interplay between level of exploration spend, efficiency and effectiveness of exploration activity, the speed of converting discoveries into mines, the current inventory of undeveloped projects, that's the quality and the number of these projects, and then the proportion of new projects that are economically viable. Innovation, that's technology, will definitely play a role in this particular space, and the growth in primary metal demand is definitely going to drive the need for the exploration for commodities. Given the long delay between discovery and development, there is a real risk that some industry sectors could face supply constraints in the short term, and especially for copper, we've all seen it. There's been a demand of about 2% per annum over the last 50 years. And that demand is still continuing. There's no way it's going to stop. And with increased population, with increased life expectancy, definitely the demand for copper is going to go up. This is both a challenge and an opportunity for us as explorers. Exploration spend again, it is projected that as a result of the COVID-19, okay, exploration spend is going to go down. If you look at the waterfall chart on the right side, what you will notice is that from a level of about 9.29 billion, gold is going to lose about 866 million in terms of investment, same proportion by copper, nickel, zinc, and the other commodities. So we expect that the year will close with exploration investment of about 6.6. This primarily is not just COVID, but I believe that the trade war between China and the US also played a bit of a role, okay? The new phase of mining definitely is a chart that has to be looked at. I only have time, but the license to operate is ranked as number 1, okay? And one has is the soft side of the business, but one has to look at it critically, okay? In conclusion, in West Africa, The level of investment for financing grassroots projects has fallen considerably, and this cannot be sustained as a region in terms of our production. We definitely need the policy reforms. Geopolitical tension is impacting and is going to continue to impact investments, and then the increasing insurgence of armed groups will also continue to impact if nothing is done. Definitely, it's a region with opportunity, as I've already alluded to, and we all have to embrace the fact that it's a region that is emerging as one of the province for gold exploration investments.